Today I will be talking about GST. Recent changes that was made in the month of September 2025 is one of the major overhauls of the GST system since its introduction in 2017. This is being termed as GST 2.0 and the government intends to reduce or rationalize the GST structure to the extent possible. Now let us talk about the major changes that have happened. These slabs which were earlier 5%, 12%, 18% and 28% have now been brought to 5%, 18%, 40%. That is, the 12% rate or slab has completely been done away with. So what happened to the items which were included in the 12% rate? Either it has been shifted down to 5% or nil, that is the exempted category, or it has been included in the 18%. Now let us see what are the major changes on an item by item basis. Apart from the essential commodities, life-saving drugs, there are certain important inclusions in the zero rated or exempted category. One is the life insurance or the health insurance policies of individuals or family members, but does not include the group policies or the insurance policies that are done by companies for their employees. These will continue to be taxed under GST, but for other individual policies, this has become exempted or zero. There are several items which have come down from the 18% slab to the 5% slab. And significant among these, and which will be affecting many of the social clubs, is gym, which was earlier taxed at 18%, has now come down to 5%. Another is the barber shops, the services provided by a barber, which was earlier taxed at the rate of 18%, has also come down to 5%. Another significant change in this category is hotel accommodation, which was earlier 12%, has now been brought down to 5%. Motor cars for up to a certain engine capacity has been brought down from 28% to 18%, although the luxury segment has been changed from 28% to 40%. Electric vehicles have been brought down to 5% GST. Motorcycles up to a 350cc engine has been brought down to 18%, whereas the higher end motorcycles have gone up to 40%. A new category has come in, that is the 40%, which is luxury products as well as sin products, as we call it: chewing tobacco, aerated water, pan masala, gutka, cigarettes, zarda, online gaming, casino, horse racing are all included in this 40% category. While we talk about the reduction in the number of slabs of GST, we must keep in mind that there are certain slabs which are still in existence, like the 3% slab which is applicable for the jewelry, various subcategories of jewelries like uncut diamond, etc., which is having special rates. Those continues. There is a new introduction of a 6% rate in case of bricks, where input tax credit is not taken. Another line of precaution which I would like to state is that in many cases where the rates have been reduced from 12% or 18% to 5%, the input tax credit benefit has been withdrawn, which means that the cascading effect of the taxes will remain in such products and customers will be getting these products at a higher price. Caution must be taken for these, barring that the reduction in the rates are most welcome. I hope this short video proves useful to you. Thank you.